Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon and welcome to this Thursday, July 24th edition of the AICPA Town Hall. I'm Michael Ceramian and I'm very excited to be with you here today. And even more excited that for my first time anyway, I get to be in studio with Mark Peterson. Mark, great to see you.
Good to be here, Michael.
Well, Mark's here all week. He's got a AICPA board meeting, so I'm sure after the town hall, he's eager to get back home to DC, where the action seems to never stop. But we also have Melanie Lauritsen. Melanie, welcome.
Thank you for having me.
Melanie's a little under the weather, but battling through. So it seems like things don't stop coming across her desk as well. So really excited to be here with all of you. As you can see, we've got a very full agenda for today. We're going to jump just in a moment into the DC and technical update. We have a special guest, Terry Lemons from the IRS. Terry and Melanie are going to have a discussion, and Terry's going to provide us with an insider's perspective from the IRS, and more specifically talk about implementing tax law changes. So really looking forward to that, Melanie. And then Aaron Hartman, who's part of our firm practice management team, is going to host a conversation with Gary and Sarah, talking about how you can drive a more agile firm through proper governance. So very full agenda here for a late July day, but let's go ahead and jump in. Mark, it's probably you're as busy as you've ever been.
Always.
It doesn't seem like there's a lot of opportunity to take a breath and catch up. And I know we've got a lot of things that we're going to talk about here today, not the least of which is, I think, government funding. We've got a bill on AI, on digital assets. It's a pretty full docket.
Yeah, it is. And it's too bad we're talking about government funding and the potential for a shutdown, because it's something that we've discussed on town halls before. But we're getting to that time of year. So again, the end of the federal government's fiscal year is September 30.
Right.
And when we kind of look at where we are now, I am having some concerns that they may be headed to a shutdown. So they're supposed to have 12 appropriations bills out of the House, out of the Senate, conference together and to the president's desk before the end of September. The House has 2 done, the Senate has 1 done. So that means they've got some choices. They can come back and try and knock off a few more of those before the 30th, and then wrap everything else up in an omnibus is what it's called. Although there has been some challenges to get the votes to that recently, or they could possibly do short-term extensions. We've seen that in the past where they do 30 days and they try and negotiate something and they do 30 days. But again, the government funding requires a bipartisan vote because it does need 60 votes in the Senate. And so historically, there have actually been Democrats that have crossed the aisle to help the Republicans who have the current majority in order to keep the government open. But the way this is playing out, we could see some challenges. They did resolve the debt limit issue in the tax bill. So that's something that we're not going to have to worry about until 2027. That's another one that's usually hanging out there and is, potential for that fiscal cliff. They're also struggling through the numbers. They're struggling with the numbers that are being produced by the committees, the budget that was sent up by the president, and some of the other legislative activity is putting a lot of pressure on whether they can actually find the votes to get this done. Neither side is going to say they want to shut down the government, but when you look at all the pieces on the table, I do have some growing concern that it could happen. And that's really important, Melanie, because we're heading into, fall deadlines, right?
Right. And the IRS definitely needs to get moving on some of the regulations there.
So one of the other complicating factors that I will also add to this is they just passed what's called a rescissions bill. A rescissions bill is basically the ability legislatively to go in and to claw back program money. So money that has been previously appropriated and given to an agency or already dedicated to a program. We saw a lot of these suggestions made through the Elon Musk Doge effort, but this is actually the legislative way where you take a list and then it goes through the House and the Senate under expedited procedures, and it is privileged, so it only needs a simple majority in the Senate. They were able to find that simple majority of 51 votes in the Senate in order to rescind basically $9 billion of federal funding. Again, that put some challenges on this concept of getting a bipartisan bill done, because basically the way the Democrats are looking at it, Michael, is we're going to agree on a bipartisan spending package, and then you're going to come in behind and you're going to do rescissions to claw back money that you agreed to, because you can do that through a simple majority and you have enough votes for that.
Yep.
So that's basically what the Democrat leadership is saying. Why would we cut a bipartisan deal if there's just going to be an end around that will pull back that money that we've agreed to? So that's a new issue that we're as challenging as these government funding bills have been. This is a new one. And I mean, going into this congressional recess, the House left last week. They're not going to be back until after Labor Day. The Senate has another week where they'll be working through nominations, confirmations, although they are being threatened that they need to stick around and get more done. So we'll see how that plays out.
Yeah, I mean, I think we've conditioned everyone to hear government shutdown and kind of a roll of the eyes. But for the first, I mean, this is a lot to get done in 8 weeks, and I think it does really feel like there's a possibility here.
Well, and if they do their recess and they actually go home,
it's even less.
It's like 3.5 weeks that they got to get it done.
Yeah,
and that has a big impact. Not only on the filing deadlines, right, Melanie, but also on
the IRS. And Mark, in the past, we've covered the administration's proposed funding of the IRS, which is to cut the budget by approximately 20%. But the House also proposed a budget of a 23% cut. So that's approximately $300,000 less than the president's budget. However, the allocations, and allocations matter, of the money are very, very different between the president and the House budget. And of most importance is under the president's budget, the taxpayer services, they got a 30% increase, while under the House version, it stays flat. But it's not all doom and gloom, because also of importance, the National Taxpayer Advocates Office, they got a 7% increase. And as you know, that's really important for those people who are communicating with the IRS. So we really have to see how this all plays out.
Well, the filing deadlines, and then also implementing that big bill.
Yeah, of course.
I know it's a lot.
And that's a big difference, Melanie, for the operations support. That affects our members big time. That's the delta between 37 and 9 is pretty substantial.
It is big differences there. So we really have to keep an eye on it.
And we're very engaged. Melanie's team is talking to the IRS constantly.
So shifting gears a little bit, pretty big event this week with the Genius Act passing, and lots just happening with digital assets in general. So
there was a real push to get this done out of the Senate, and basically the Senate kind of playing a game of chicken with the House to say, don't change the bill, accept it, and then we're going to get this to the president's desk, and then actually was signed on July 18th. Really lays out the first framework. For stablecoins. Stablecoins are pegged to the U.S. dollar. Lays out a framework, provides some clarity, some safety around that, proof of reserves and things around that. There's tax aspects to this, right, Melanie? But there's also audit requirements, both annually and a monthly exam as well. There was language that we would have preferred that made it into this bill, but it was moving very quickly. However, there is another bill that's basically kind of tied to it, following behind it, called the Clarity Act, and that's really focused on who is the regulator, CFTC for commodities or the SEC for securities. But within that is some language that gave us a little more clarity around the internal controls and some of those requirements around the content to be audited, and some of the things that we really wanted to see in there. So that bill passed the House in a big bipartisan vote. It's over to the Senate. The expectation is it gets through the Senate this fall, but you got to hedge your bets.
Yep. And then kind of just sticking with digital, Mark, again, another pretty big announcement just yesterday, the David Sachs, the crypto and AI czar, along with the administration, kind of announced an executive order, the White House Artificial Intelligence Action Plan.
Yeah, so this has been under discussion since, it was one of the proclamations that the president made within, I think it could have been the first week, if not the first day after he was sworn in, really laying out the roadmap. Some of the elements to kind of pay attention to is the significant issue that the administration has identified is competition, being competitive around the globe, particularly with China. And in order to be competitive, don't stifle innovation with regulation. So it's very clear in the action plan to basically communicate to the agencies not to do anything that would hinder innovation through regulation. Another part of that was to really dissuade states from doing the same thing, moving forward with regulations that would, again, hamper or hinder innovation. And another element to this, which is interesting and also very political, is these data centers, right?
Yeah.
A lot of energy is required, massive facilities, but it is required in order to advance artificial intelligence and keep the U.S. competitive. But, there's a little bit of a not in my backyard element to it.
Yeah, no, without question. So lots happening there. So 90 deals in 90 days.
Yeah, the tariffs still rolling. We did get an announcement on Japan.
Mhm.
So that one appears to be in the books, although we have to confirm that and see some of the details. We are picking up that maybe the fact that Japan got done, maybe incentivizing the EU to maybe work to get a little closer to close the distance with the negotiations. It sounds like things are getting a little closer on the China deal. Philippines is another one that they're talking about, announcing some details on. So it feels like this has been dragging on forever, but deals are being announced. And I do believe at some point we're going to get to a material level where most of these are going to be done.
Yeah, which would be big. I mean, if something can be done with India and the EU, it will be maybe beyond the worst of this, but at
Significant,
least,
just some clarity.
Yeah, exactly. So, but speaking of the EU and tariff talk,
well, part of the reason they call it a trade war is because there's retaliation.
right.
And although I just mentioned maybe this has incentivized the two sides to get closer together because they're seeing some other deals get cut. We have only seen, this has been primarily around goods, not services. The only services element that we had seen in these discussions was foreign produced motion pictures.
Mhm.
This is the first time potentially that there was a focus on the idea of putting tariffs on services, and that was as a retaliation from the EU towards the US. So again, this is just part of the negotiation, but we obviously, because of the impact on the profession, we keep a close
Sure.
eye on the impact on services.
Yeah, and 70% of our economy is
Absolutely.
services. Then disaster relief, New Mexico and Texas.
Yeah, so we've all been hearing about the terrible flooding and the storms, obviously, in Texas, and the IRS has granted tax filing and payment relief to certain areas where the storms began on July 2nd. Additionally, parts of New Mexico were also offered the same relief for their storms and landslides too. So both these areas now have until February 2nd to file the returns or to make payments. But I really encourage people to be able to keep up and start checking for those updates, because Texas, for example, they've already expanded their list of the counties that are getting relief since their original announcement. So it's important that we keep up with it. The other thing here has to do with the new interplay with HR 1, and that has to do with the casualty loss provisions. So both Texas and New Mexico could be eligible since both of those disasters occurred prior to July 4th. But the incident period has to end by August 3rd, so that is technically still ongoing. The good thing about that was, if you guys remember the LA wildfires, they originally hadn't received that casualty loss relief, and they now have it. And so they fully qualify for it, and thanks to the amendment or the passing of HR 1. So just be aware with that. Now, as a reminder on this slide, that you'll see the link to our Disaster Relief Resource Center, and that really has valuable information. So things for like the Benevolent Fund in order to help take care of those in need. But also it has information on how CPAs can play a critical role in the disaster planning, the relief, and the recovery. And really, it's just helping individuals and businesses navigate a really difficult financial and tax challenges too. And unfortunately, a lot of people are underprepared for a disaster, which that actually leads me to the next slide. So the AICPA, we partnered with the Harris Poll to ask Americans across the entire nation various questions around what relief Americans would want from the IRS following a natural disaster. And on this slide, we see the results, and they're actually really interesting. So I'm going to go ahead and start with 42% of Americans said that if they experienced a natural disaster, it would be helpful if the IRS could offer tax relief once a governor declared a state of emergency. So as many of you know, and you guys have heard, we're waiting for the president to sign a bill into law that offers exactly that relief. So again, thank you to everybody who has supported that initiative, because obviously, not just tax people, Americans feel that that would be very helpful. The survey also showed that 66% of Americans say that being impacted by a natural disaster would have a major to moderate impact on the financial situation, but only 32% of them have not taken any financial steps to prepare for a natural disaster. And again, that's where a CPA, or you as a CPA, can help with your clients, preparing them to be able to get through this. The survey also tells us that 37% of Americans have experienced fraudulent activities as a result of being personally or professionally affected by a disaster. And they also touch base, and we see that 63% of the business owners are concerned about the possibility of financial hardship if they experience a natural disaster. So again, all of these areas are areas where CPAs can help, and we definitely have those resources available. We have resources for pre and post disaster planning in the forensics, so in the event of fraud, and also business valuations. And then of course we have advocacy work that's also ongoing. So I really encourage people, particularly as we start to get into the deeper the summer, the August, September timeframe for the hurricanes, please take a moment to take a look at that link from that previous slide to help work through those areas. On this next slide, I wanted to...
We had a lot of questions on that first bullet there on the CP59SM before we even started the webcast today.
We sure do, and that's exactly why I have it here. So IRS systemic issues. So the way we work, we hear from you guys. So like just in this forum, when you guys put in questions, we start looking into it. And as we look into it, we start to work with the IRS to raise awareness and ideally get some sort of resolution. So to be clear, that link that you see on this slide, that takes you to tax news. And there's a section that's called the current IRS systemic issues. And that's a drop down. And that's where you're going to find the latest information as to what we're seeing, who's affected, and if there's any resolution. Now, there's more on that link than what is here on this slide. But to your point, Michael, like you said, the CP59SN, I've heard a lot of people coming in, and like you said, the questions for the town hall are coming in quite hot and heavy for it. What that notice is, the IRS is sending a notice saying that they haven't received your 2024 return, even though the returns were properly extended through October 15. And I know that's really frustrating, and we're actually working with the IRS to pinpoint where exactly there is an issue. What we know so far is that the people have valid extensions, and oftentimes it's even reflected in the taxpayers' transcripts. And we also know that some of those people that did receive those had automatic extensions. So we're talking like for those that had disaster relief issued to them. So they're getting notices. Right now, we don't have a resolution. We are still working on that. And what we're hoping to get to, if you also see on this slide, we have the CP 161, where the IRS was sending erroneous notices to various types of returns, assessing estimated payment penalties on there. And if you look to see what the resolution on that was, people needed to refer to an alert, an internal IRS alert that went out in order to have their agents be aware of it. So we do get resolutions for this. Right now for CP59SN, we just don't have them. Okay, on to this next slide. We're going to move on and touch base on a subject that we have touched on a few times this year. And it really comes down to tax pro data breaches while we're talking about this. Now, what you see on this slide is data directly from the IRS. And so as you can see, the last slide, the last year, the number of data breaches increased within the last year, over 100 cases. But more concerning is the increase in data breaches in the past month. So just under a month. And for that, we've seen that it's increased about 29 cases, and that translates into about 58 tax professionals have been affected or impacted within the last month. So that means we really need to stay vigilant and aware of the scams that are out there, and that there is a link there for the most common scams that we can see and that our people are targeted towards. On this next slide, I'm not going to go into detail, but you will find what you need to do if you were to become a victim of a data breach and the steps that you can take. And I want to note that the WISP, which is a written information system plan, needs to be, and security plan is one of those things that are required. And on there, we have support for people who offer that support, but also the AICPA has unlocked the tax section template. So that's open for you guys for 2 weeks. So take a look at that. On this next slide.
I know in the RightWorks program, Melanie, they'll actually work with a firm to create the WIPs for them.
Perfect.
It'll save a ton of time. We've gotten good feedback on that so far.
That's great to hear. Okay, so we're running out of time, so let's go ahead and do a round robin of the IRS. The e-payments, again, the mandatory e-payments, that is something that I have seen hot and heavy come in the questions here for the town hall, and we've heard from you guys. And what we did is we came together and came up to see what recommendations and what it is that we really needed. So we know that the executive order is moving forward. I've heard the same thing as everybody, that it would become effective of September 30th. But there are numerous groups that would be negatively affected and impacted by this. So we did submit a comment letter to the IRS. The IRS was looking for feedback on it, and we did ask them for an extended amount of time and also consideration as to how they're going to implement it. It just can't be a one whole blanket that covers everyone without exception. So they have to start really looking at that and seeing how they can help with the taxpayers on that front. We also got the first nod from the IRS where they're starting to offer guidance. Now, what they did is they put together a web page that had information for the no tax on tips, no tax on overtime, the car loan interest deductions, and of course the exemption for those over 65 years old. So with the IRS posting on the website, they just put an outline of what is in HR1, so there's no additional guidance there, but we do expect the IRS, this is their nod of where they're going to start working for that. Now, I also did see in the questions coming in with regards to 174, I'll repeat what we know from talking with the IRS, and that's not on the slide, my apologies, but we do know that they are focusing on trying to get some guidance for the small businesses as they move forward to implement it. We just don't know the timing on that. And I know everybody would like to see that sooner rather than later. So again, there are other things on this slide. There are links to everything that is on the slide if you want to get more information and more reading into. So please take some time there too.
And Melanie, just a call out. I mean, that was great. Just another call out to you and Elisa and to Mark and the entire team. I mean, we had that special edition town hall last week on HR1. We had just under 20,000 people tuned in live for that. It was just really great feedback. You guys are doing a great job keeping everybody updated, and I know continue to get that information out. So well done.
Great team.
Well, with that, Melanie, we're going to bring in our next guest. We're going to bring in, there we go, Terry Lemons. Welcome, Terry. Great to have you with us.
Good afternoon.
So everybody's looking forward to this live conversation here between you and Melanie from getting a little bit of an inside the IRS perspective. So Melanie, take it away.
Sure. So I'm very excited, obviously, to have Terry here with us. He is the former head of the IRS Communications and Outreach, and he's currently a speaker and commentator. But during his time at the IRS, he actually created the IRS Dirty Dozen list, which we cover here on the town hall oftentimes. He also did the social media program that was developed at the IRS, and he also helped implement over a dozen pieces of legislation there. And Terry, correct me if I'm wrong, you've worked directly with at least 6 commissioners during their time and their terms at the IRS.
Right, and those were commissioners, before the start of this year. Right. So yeah, I was around the agency for a long time.
And you've seen a lot happening. So with that, Terry is very well suited to help us understand how the IRS goes about absorbing big legislation like HR1. So Terry, what are your general views of how the IRS will implement HR1?
Well, thanks for having me, and appreciate you hanging in there, Melanie. I know you're under the weather, so I'll try to make this easy on you. I'm really happy to be here. One of the things that I think I saw while I was at the IRS is that when these big pieces of new tax legislation come out, I think a lot of people just take it for granted the IRS is going to deliver. And everybody watching this knows there's always bumps along the way as new legislation is being rolled out by the IRS as it's being implemented. But from my standpoint, watching it inside the agency really has a good approach to putting in place new legislation. And I think there are, several things to kind of keep in mind. Number one, despite its faults, the IRS, I think, has delivered more bills successfully over the last 25 years than any other federal agency. IRS employees always step up. They really work hard to deliver this. But I think this year is going to be something that's going to really bear a lot of close attention, because the Big Beautiful Bill Act is a massive bill. There's a lot of fundamental changes in this. The IRS is really under the gun right now.
They are.
Biggest set of changes we've seen in a number of years. But there's also unique tidal forces at play the agency hasn't had over the last 20 years or so, putting in place new legislation. And that's the loss of staff. There have been 25,000 employees who've left since February. And as you noted earlier, look at that budget proposal for fiscal 2026, potential 20% or more cut of the agency. This is this is going to put a lot of pressure on the bill implementation. I don't think you should ever count out IRS employees, but there's some really unique challenges facing the agency over the next 6 months or so.
And one thing I'll say, because I did see this come in the questions here at the town hall, they were saying of showing kindness when you do call the IRS and talk with them, because they do take on a lot of this lift and they make it happen. So Terry, with that, let me move on to my next question. Which IRS departments or divisions do you think will be the most affected by this new legislation?
Yeah, I'd agree with that comment, by the way, Melanie. IRS employees are as frustrated as the people calling in. I wish everybody could see what our call centers, how many different systems the IRS assisters have to go through. It's a real challenge. So that's a great point and really greatly appreciated. This bill is wide reaching and it's going to touch a lot of different parts of the IRS. You mentioned earlier, Chief Counsel. Chief Counsel really is on the front lines of some of the first steps of this. And, that fact sheet that came out, is an indicator of just how high a priority it is. But there are a couple of other important areas that are really on the front lines, and that's the taxpayer services area, which runs the filing season and many other things, and the IT department. And part of the IRS playbook on implementing new legislation is that they get a head start. And we saw this during the pandemic. They don't wait for the legislation to be signed. They start working it very early on. A great example was back in early 2021 with the third round of stimulus payments. Nancy Seeger and the IT team worked with Ken Corbin, the taxpayer services team. They got those checks rolling within 24 hours of the legislation being signed by the president. That same operation is at play here. And the agency actually got a head start looking at some of these provisions and, really starting to think about what it was going to mean for things. So I think that's helpful. I also think the timing of this, having a big tax law approved in July is helpful. We've certainly seen it in the past, these things coming out in November, December. The fact that the extra time here is badly needed given the scope of this bill.
So Terry, with that, will it also have this new legislation? Will it require changes for, obviously, you said IT, right? The IRS system, the forms, publications, procedures, all of that? Does it entail it all?
It's going to require a lot of changes across really the whole swath of IRS operations. It's going to require updates to, programming that the IT folks do. It's going to require additional information being shared out through legal guidance, the website, news releases. I think if you just looked at the core TCJA components that were just simply extended or revised. Those are relatively easy lifts, relatively speaking, for the IRS to make changes on. What's more complicated are making the kinds of changes that you have with things like the tips, Social Security changes, the overtime. That's where you start getting into changes that are needed that show up on the 1040. Maybe you need new schedules and things like that. That's where there's a lot of new programming that's required. And those things just don't, appear out of nowhere. You've got to have counsel looking at it. You've got to have programmers getting information from the experts in taxpayer services, to get all that information right. And then they have to build it into the system. It's a heavy lift, and people don't realize that.
That is a heavy lift, which then makes me wonder, does the IRS actually have sufficient staff and the skills or updated technology to implement this legislation? So in other words, do they have enough people with enough expertise and the right skill set to implement something as large as HR 1?
That's a great question, Melanie. For me, this is one of the biggest questions facing the IRS. The agency has lost 25,000 people since February. And these weren't just compliance people that left. A lot of those people were late career. They had a lot of institutional knowledge. And this is a wild card in implementing this bill. What is that impact going to be? For instance, if you're over in taxpayer services, there are people there who look at the law, they look at the council guidance, and they have to interpret what the programming specs are for the IT people. A lot of those people left, a lot of senior talent left. And for me, this is a big unknown. I never count the IRS employees out, but this is an additional strain on the system.
Okay, good to know. So beyond what we just talked about, are there any other potential obstacles or challenges that could hinder the IRS successfully implementing the new legislation?
Well, beyond the staff losses, IT lost 2,000 people. Council was, had a relatively soft touch. They only lost about 12% of their people. So I'm not that worried about the council guidance getting out. It's a huge priority both for IRS Chief Counsel and Treasury General Counsel to get that out. The question is how quickly they can do it. And I think one of the biggest obstacles for the IRS right now is time. Do they have enough time to get all those legal guidance done? Do they have enough time to get it in the hands of the people reviewing the specs, who are reviewing the programming? And here's another thing that's overlooked, is that not only do they have to get IRS systems ready, they've got to get that information out so tax professionals, AICPA, and others in the tax community have it. The payroll community is desperately going to need this information because there are changes, potentially to the W-2s and 1099s coming out of things like tips and overtime. And the software community needs these changes too. So timing is going to be key. I actually think it was a really good sign that fact sheet came out and the IRS and Chief Counsel committed to doing some definitions within 90 days. I saw that as a positive sign.
That's good to hear. So in the months ahead, are there any existing backlogs or delays in IRS operations that could be expected or could be exacerbated by the new legislation, Terry?
Well, at the top of the program, there was discussion about a possible government shutdown. I mean, that certainly won't help it. Even the thought of a government shutdown creates a lot of internal dynamics that distract people inside the IRS. That's something to keep an eye on. I do think the budget, that's a big concern for me, what's going to happen with that. I do think that, you're going to see council probably, come out with some safe harbors, maybe some transition guidance.
Yeah.
We need to keep an eye on how that guidance is flowing out over the next 90 days or so. But pulling out a crystal ball, I think people really should manage their expectations. This is a massive bill. People should not be expecting an early announcement on when the IRS is going to open up for filing season. I don't think people should be alarmed by that. If you get into late December or January, there's not an announcement. This is something the IRS teams really want to make sure they get right. So for me, I just think a lot of patience is going to be involved. mean, I know there's a huge number of questions out there. And, I do think what the IRS teams are being told by leadership, what the Treasury teams are being told is this is your top priority.
Okay. Well, that is good to know, especially with the start of the filing season. A lot of people get nervous with that. So, Terry, what mechanisms are or will there be in place to educate taxpayers or practitioners, like you said, on this implementation of HR 1?
The IRS has a wide variety of ways to get this information out. Of course, there's the legal guidance. There's public education efforts. You saw the fact sheet that just came out, news releases, social media, our stakeholder liaison team. See, I'm still calling, I'm still referring to the IRS as our, it's kind of an old joke. We all work for the IRS ultimately with those taxes coming out. But basically the stakeholder liaison community, I mean, they're going to have to do a lot of education. This to me, I think, is one of the hidden traps that could cause problems, is that my old organization, Communications and Liaison, has seen a really deep cut. CNL employees across the agency have been cut by 44%. These are people who write the news releases. These are people who are going out and doing outreach to local tax professional groups. These are people that are doing social media. And I find it ironic that this area has been cut so much at the very time where there's going to be a vast need for communications to get out. And earlier I talked about how much senior talent had left. We really saw some of our most senior staff in communications and liaison leave. So, I mean, that's going to be an added challenge for the agency to get out enough communication. What I really think is going to happen here is that there's going to be added burden on the tax professional community to help educate clients and taxpayers about what this bill really means, because I think you'll see less communications coming out of the IRS with these staff cuts. The other thing I worry about is that less information coming out, there's more potential for scammers and bad information coming out on social media. And that, that is an area worth watching. I mean, already you're seeing bad information about the taxability of tips coming in. So for me, that's an area to watch out for. And tax pros need to be ready. They're going to have to do more education on their own, I think.
They do need to be ready. One thing, and we're running out of time here, but I did see quite a few questions coming in about the fact sheet. Where can they find the fact sheet? And if you were to, if you download the slide deck where we had the IRS round robin, and I touched base on the preliminary guidance that the IRS gave on no tax on tips, on overtime, the car loans, and the senior deduction. Yep, that is the link for it. Michael, thank you, Terry, for joining us, and hopefully we can bring you back for further questions too.
Thank you, Melanie. Appreciate you having me. And feel better.
Thank you, Terry.
Thank you, Melanie. Thank you, Terry. Melanie, a lot of love and admiration for you on the chat, for you kind of muddling through here with us when you're not feeling well. So great discussion. We'll see you just in a bit in open forum. So let's go ahead and pivot to a different conversation. We're going to bring in Erin Hartman. Hey, Erin, how are you?
Hi, good. How are you?
Great. And I know you have Sarah and Gary coming in with you. Welcome, everybody. And Erin, you're going to go ahead and lead a discussion around firm agility through governance. So turn it over to you.
Great. Thanks. Firm governance, it's a topic that I know a lot of you are thinking, okay, that's a large firm issue. It doesn't apply to me. I'm a smaller firm, but please, it is important if you're any size firm, really any size firm, any size organization. It might look different depending on your size. You might have different issues, but it's still important. Unless you're a sole practitioner, please pay attention. Don't multitask the next few minutes. I think you'll enjoy this segment. We are very fortunate to have with us today two well-respected thought leaders in the profession, Gary Thompson and Sarah Johnson-Dobeck. Thank you both for being here today.
Good afternoon.
Gary brings us, he owns and started Thompson Consulting, but he brings with him firm leadership experience, decades of firm leadership experience. And in the second part of his career, he now coaches and consults firms of all sizes, small, medium, and large, on areas of strategy and governance. And Sarah has also dedicated her career to the profession. She is the founder of Innovatus Consulting. She comes at it from an angle of marketing and practice management, and has helped firms nationwide with their goals with growth. So thank you both for being here today. We'll jump right in. Gary, what do we mean by governance, and why should we be thinking about this so much right now?
Aaron, good afternoon, and thank you. And thanks to the AICPA for the focus on this as part of their overall transformation series. And what's a great place to start as to why we're focusing in on it now. The disruption and opportunities in our industry cause us to need to move at a faster pace, a more agile pace, whatever word you might want to use. So governance then isn't just about who gets to vote, which is typically where we might start in our thinking, and that's an appropriate place to think. But governance really is about how firms make decisions, how we align on strategic matters, how we're going to move forward in the future. And so governance to me is about how we bring clarity, whether that's in roles and responsibilities, accountability, who's in charge of a particular strategy area, and more importantly, how do we make sure as an organization we know exactly where we're going, with whom, and at what pace. And the way I think of it is it's structure, it's processes, systems, but thinking of another way, we often address governance as if somehow it's a slowdown for a company. And the reality is, for a firm, CPA firm, or whether it be our members in industry, governance and good governance is a catalyst. It's an engine as opposed to a brake. So, Aaron, it's just an overall system and process to allow us to make good decisions. And we'll talk more about some of the elements of it as we go through this.
Great. Can you give us a little more context about why it's so important for small firms as well?
Yeah, great. Hats off to the AICPA on this. Sarah and I have had the privilege of working together on this and doing some prior webcasts, and you've been involved in podcasts with us, Aaron. I had a firm reach out to me, two-partner firm, and it's a great example of why it matters. They're looking at their future. They're looking at opportunities to scale, admit new partners, and there was this reality that they weren't too small to start thinking about the future, to challenge themselves as to what may be holding them back from making good decisions. And importantly, while we can think about the future, and while we're thinking about the future, I should say, why don't we make some decisions before it becomes, and I'll put the word emotional in quotation marks for us, before it's about a particular person. It's really about the organization. So small firms benefited from, because they're at the epicenter of what's happening in our profession. Sarah and I have the privilege of working with firms of all sizes, and the epicenter are those small firms that are working hard every day. They're thinking about generational differences, thinking about the future. Governance helps them get ready for that.
So Sarah, Gary mentioned sometimes people think of governance as like a slowdown. There are just so many changes happening right now in the profession, so many that we can control, so many we can't control. And I think of it as an opportunity similar to, we had Cassie Rushing on Town Hall a few sessions ago talking about strategic planning and how it's so important for a firm to be in control of their own destiny, in control of their future, and not have it just happening to them. And I think governance is similar to that. So when we think about all of the challenges and concerns that firms have, and changes that they're making with their governance because things are different, because whether or not it's the new tax laws and regulations, it's AI and technology, or just internal firm growth that has really changed the firm a lot. How do we look at these? How do you talk to firms about recognizing these as opportunities and not just challenges?
I really like how you framed what Cassie talked about creating our future, because that's the real opportunity in this environment that we're operating in right now, right? The changes that we're facing are forcing us to think differently, and that's a good thing. It's always been a good thing, even if it doesn't feel like it some days. And when we think about governance, what I think about is this is really the bridge between our strategy and execution. And so that's really the opportunity, right? Having good ideas isn't enough. We have to be able to act on them. And governance is the structure that allows us to be agile and to stay focused, even when our world around us just feels like chaos. And, for small firms, I think, quite honestly, this is where they thrive the best, right? As a small firm, you can pivot much more quickly than the larger firms are. The last couple of weeks, I've spent a great deal of time with our clients, helping them communicate this new tax legislation, throwing up webinars. And some of our smaller firms have pivoted more quickly than our larger firms to get these up. And these are practicing practitioners, right? They're not sitting high level. It's marketing and business development isn't the only thing they're doing. Operating the firm isn't the only thing they're doing. And so that has given them a competitive advantage in the market. And when we talk about transformation in this profession, right, that is such a key piece, is the ability to move quickly, to respond quickly, because it can't take us forever to make a decision, or we lose out at the end of the day.
Right. So I've been working, as Gary mentioned, with Gary and Sarah on a lot of governance resources. We'll talk more about those. But in looking at that and talking about that, you know, there are a lot of buzzwords that are used, and sometimes it can get confusing. But when I was trying to think, okay, what is this exactly that we're talking about? And I think what it is, and Sarah, you can correct me if I'm wrong, is really focusing on everyone in a leadership position's highest and best use.
Yeah. Oh, that resonates with me. You know, I'm a big fan, and I know Gary is too. We talk about this all the time about clarity and roles and responsibility. We cannot spend enough time in our profession clarifying that, making sure that we have the right people in the right seats doing only the work that they can do. This is where the firm wins at the end of the day. And y'all, I lived this. Over 20 years ago, I was hired as a marketing intern inside a two-partner CPA firm. That was unheard of. I didn't realize it at the time. They also hired me on March 15th, so kudos to them. But at the time, that was so innovative, right? And what I learned through that process is those partners learned quickly to lean on me, and I brought a perspective to the table that caused them to think differently. And today we see that showing up a lot, and we have a lot of non-CPA leaders at the table that are popping up in significant leadership roles running firms. By the way, we just dropped a podcast, 2 days ago, Aaron, on this exact topic. It's a great thing to listen to. And that's the power of good governance. When we can get people in the right seats, focused on the right role, that's what gives us this momentum, this ability to be agile and to respond to what the market's needs are and how we transform our firms.
And I know I mentioned highest and best use in leadership roles, but really this can apply to any organization in any area. You could have a nonprofit, you could be in charge of the finance function at a small business. Really any group of people that you have control over, you can apply these same principles to. We're largely speaking to public accounting firms because, quite honestly, I think you guys would agree that a lot of what we're finding as firms are looking at their governance and changing their governance, they're going back to more of a corporate governance structure. They're realizing that maybe every partner doesn't need to be involved in every decision. And I know you mentioned that about who gets a vote, Gary, but sticking to that, Gary, just the point of highest and best use and the inefficiencies of having every partner involved in every decision. You know, if I'm a partner, I'm thinking highest and best use is probably what I enjoy. So I want to be spending more time doing what I'm good at, what I enjoy, not having to spend time doing things that I don't enjoy. But I also feel like I'm giving up some control if I don't have a say-so in everything. That's got to be something you guys run into as you're talking to firms and you know, their models are being challenged. So how do you address this fear and concern?
Very carefully, but also very tactfully and with respect to the legacy of how we run our firms and the business model, but looking to the future, Aaron. I think it's the balance. And the alignment to the great words that Sarah just had on highest and best use is certainly a focus. I think, first of all, when we consider changes, we need to make sure that everyone understands this isn't about removing their influence. It's about refocusing their influence. We need their voice. We need their impact in our firm. We just might find that it's better off somewhere else, to your point. And when I think of it, and I think of my career from a sole proprietor to ending my career at a 200 plus partner firm, this was a major pivot point. Every time we took quote unquote something away, we had to ask ourselves, what do we obligate ourselves as leader back in return? And where I got to know Sarah best many, many years ago is in the whole area of how do we communicate better? So if I'm going to take your vote away, if you will, or take your direct engagement on routine matters away, then my obligation back to you is to be more communicative about it. And rather than just saying, here's some minutes, here's the financial statements, you figure it out, find a way for me as a leader to communicate. Your voice may have been heard in a different way through surveys, through something else, but here's what's going on. Here's the alignment to the firm strategy. Here's the alignment to the firm's vision. And we just get better and better at communicating. And then Aaron, Sarah and I would both agree that as we make these pivots, how we transition are super important to how people feel about their ongoing influence. And so as we potentially make changes in governance, we may find that things that we do in the first year or two go away over time as our partners build confidence that they have a voice, but a different voice, that we will communicate critical decisions, even though we may not be obligated to go back to them for votes. And so it's all about, again, it's allowing them to have influence and impact, but having that influence and impact done in a different way. So, well, we need them all in. If the future of our firms and professions ever needed partners to be committed cohesively to something, now is the time, but that doesn't mean that we have to sit around a boardroom table to make those decisions.
Great. I do want to point out, thank you both so much for being here. I know you'll stick around for the session at the end. I do want to point out some resources that we've been alluding to. These are resources for PCPS that Gary and Sarah have developed with us as part of our Transforming Your Business Model project. We have tools that will help you really look at your governance and see if you should reevaluate certain areas, and tools to help you make some of those changes. We also have articles and podcasts and a special 4-part podcast series led by Sarah and Gary, where they talk to practitioners who have made some of these changes in firms, who have made some governance changes, and they share their journeys with us. So please take a look and listen at those. We also have a 5-part webcast series on the 5 areas of business model transformation, and the governance one features Gary and Sarah. Thanks so much.
Thank you.
All right. Well, thank you very much, Aaron, Sarah, and Gary. Great discussion. Really appreciate it. And let's go ahead and bring up the entire crew for a discussion in open forum. Well, hey, everyone. Welcome back in. Good to see you, Mark.
Great to hear.
So we only have time for a couple of questions, but I want to start maybe with Mark here by my side. One of the questions I thought was pretty interesting was, maybe just comment, Mark, the overturning of Chevron and the impact, if any, that will have on the IRS.
Yeah, we've touched on this, over the months. The Supreme Court overturned the Loper Bright decision, about 40 years old, which basically said that the court judges should be deferring to agencies. So if there was ambiguity in the statute, they should defer to agencies and to the regulators. That was overturned. So now they no longer have to have deference to an agency, and that agency could be the IRS or Treasury. And so why it's really relevant right now is the timing. Yeah. This is kind of going to be the first big bill that's tested here. Now, there'd have to be somebody that would engage, the courts. Mm-hmm. But we know there's going to be ambiguity. We talked about implementation of the bill. So they're going to go through a process where they're going to put out guidance. They're going to put out FAQs. And maybe we don't know. There'll be some type of corrections or technical corrections legislation to fix stuff that they need statutory fixes for, although there's some questions whether they could get that done with 60 vote requirement. But then will these be challenged? Now, I think the thing for us is, does that extend this uncertainty? We all want clarity and definitive guidance as quickly as possible. So we're going to see. We don't know. This is the first time we've been through it with this court decision out there.
And Mark, maybe just staying with you for a second. I just read through the Q&A, and I think folks, they hear about just the continued cutbacks regardless of administration. I mean, there's always been anxiety around service levels, and maybe just reiterate for folks AICPA's position as it relates to how we try to influence or work with the IRS as it relates to supporting operations.
Absolutely. I mean, over the years, all of the agencies, the staffing levels have fluctuated. It's not just the IRS, it's other agencies we work with, Department of Labor, SEC, PCA, OB. We watch it very closely. I mean, Melanie and her team are very engaged, obviously, with the IRS, having conversations constantly. And what we have said to Congress and will continue to say is that there is a taxpayer and a tax preparer need. Mm-hmm. We need service levels that will meet those needs. we're not going to speak to what the budget should be,
Right.
what the head count in a department should be, but it's obvious that there's significant change going on and stress on these agencies. So it's good for us to question, can they implement this big bill? I will tell you this, it's in the Secretary of Treasury and the IRS commissioner and actually the president's interest that they can implement their landmark legislation,
Right.
which is the biggest thing that's going to happen this year. So we'll see how this goes. There's a reason we're watching it because of the numbers and the pressure on budgets. But if we also saw, this discussion started right after the election, and filing season went actually fairly well. Now there's planning that goes on ahead of that for the upcoming filing season. There's a reason we talk about it. It's because we're watching it. But the policymakers have to figure out those decisions.
Got it. And Terry, maybe we bring you in. Oh, I'm sorry, Melanie, did you want to comment there? I didn't know.
I just want to make one quick announcement. My apologies for interrupting. The WISP page, I've seen a lot of the questions coming in. It is now unlocked. So just for those who are trying to get into it. But go ahead.
That was going to be my closing question for you, Melanie. So you got that one. A lot of angry WISP people out there. But Terry, maybe bring you into the conversation for a second, because a lot of folks, we talk a lot about AI, kind of the intersection of AI and accounting and finance, but more specifically, maybe you have insight into this, maybe you don't, but just plans for the IRS to be able, you would think that could create a lot of capacity and help as the agency modernizes and is leveraging AI. But any insights or perspectives on that?
I think that AI is going to be a huge part of the future for every industry out there. I think it has potential to help the IRS. And I think, for me, the question is, can it be used responsibly? And I mean, the tax code is so complex. And I mean, try asking, ChatGPT a question about a complex part of tax law. You don't really want to trust all that. So I think it needs to be done responsibly. I do think there's a lot of potential down the road to gain a lot of efficiencies. And if you talk to anybody inside the IRS, they won't disagree. There is ability to have more efficiency. And I think AI can be part of it, but it needs to be used responsibly.
Well, great. So we're at time for open forum. I want to thank all of you again for being here today. It was a great hour of information, and thank you. And we'll keep moving through here and close out. So speaking of which, Terry kind of set this up, but I did want to remind everyone that we have a paper out there on tax research. A lot of new tax research tools and platforms. This one is agnostic. It talks about really anybody that's interested in using AI for tax research and guidance. Go ahead and please access this. We've just gotten a lot of good feedback from members, and there clearly needs to be oversight, but there's a lot of efficiencies if you can find a tool that really can support what you're doing. So we've talked about BlueJay in the past as it relates to tax research. I want to also point all of you to Josie. Josie is the AICPA's own AI-powered research for accounting and auditing professionals. So very similar concept, but more specifically focused on accounting and auditing. And so if you want to go ahead and just test it out and use it, there's a QR code and a URL. We'd encourage you to give it a chance. Early feedback has been really positive. And we'd love to hear what you think. So please go ahead and give that a look. We've talked a couple of times throughout the year about the preparing for the new SQMS #1 standard. So firms are moving quickly to have the new QM standard implemented by December 15th. We will have a webinar on August 6th at 2 p.m. Eastern time. You can register for, talking about the standard and some tools to help you be prepared and implemented for those of you that are on this deadline. We also are in the last week. We have our audit benchmark survey out. I think there's 1 or 2 more weeks that firms can go ahead and respond. It's at cpa.com/audit survey. Again, this is completely tech agnostic. It's really trying to create good benchmarking data as it relates to audit and assurance. So Encourage you, if you are in audit and assurance, to go ahead and sit for the survey. Would like to remind everybody that you have another few days, actually a week, before early registration closes for Digital CPA 2025 Growth by Design. We're going to be right down in DC near Mr. Peterson. Technically, we're in Maryland. It's National Harbor, Maryland, but going to be a great event. We've really got a great lineup, so go ahead and take advantage of the early bird discount on that. And then lastly, we'll just remind everybody of all the Town Hall digital resources. This rebroadcast will be available next Monday, July 28th at 1 p.m. Eastern time. And then we just will remind you that we've got a pretty full slate marching into September. So we're with you on the 7th and on the 21st, and then we'll be back again after Labor Day on September 11th. So plenty of town halls in the queue. Want to thank everybody for being with us today. Really enjoyed being with you in the studio today, Mark, and hope everybody has a great rest of the day. Thank you.
Thank you for your participation. You can also subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and find resources at cpa.com/townhall. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.